Hello everyone, how are you guys? This is your host Vaibhav. In our today's session of Daily Stock, we are going to look at one interesting play in the semiconductor space. The name of the company is Texas Instrument. If you have been following the semiconductor companies, particularly after the AI rallies started, we have this company which is kind of not in limelight. It is neither seeing rally nor it is participating in the ongoing boom, but it has a robust product pipeline and it is one company which has been there for many decades, and it is a solid play if you are looking for reasonable returns. If it seems to be stabilizing on the lower levels, then I think this is one stock to watch out for. And if you find pricing favorable, you can even think about going for a investing decision. So we will see what this company does, what its current prospects are, and also its forward guidance provided by the company itself after looking at its quarterly earnings, which were released in the last week of July. It has seen revenue slow down for last couple of quarters. This year, both these quarters, the first quarter and the second quarter, have seen company bringing in less money than what it was doing for the same quarters of 2022, and it is still expecting the revenue pick up to be slower. It is still not forecasting the levels seen in the best days of 2022, because in and afterwards the late 2022 we saw that many of the technology companies started to experience slowdown because as the pandemic waned, we are seeing the gradual opening up of economy, and less people are glued to the screens, and the tech enabled segments of life, and that has caused this slowdown in the tech space after boom which we saw for a couple of years during the pandemic phase. But overall, the things are still solid. It is play. It is one investment opportunity which can be kept in your watch list, and if things seems to be stabilizing, we can indeed give it a shot. Now let us go to its quarterly earnings. These were released last month itself, July 25th. And here, as I said in my introductory remarks, the company saw its revenue dipping to US dollar 4.53 billion from more than US dollar 5 billion it brought in for the same quarter, that is the second quarter of 2022. So there is this revenue slowdown of almost 10 to 11 percentage point. But I have also listed the reasons for that, and this weakness is not likely to last beyond couple of quarters, and with lower base, I'm expecting the company's revenues to show positive growth in the first half of 2024. But that is, of course, a couple of quarters away. In the meantime, the revenues are likely to be lower, though we might see sequential growth, but in terms of year on year, things are likely to take time for the turnaround. Let us look at the highlights of the quarterly earnings for the Texas Instruments. The cash flow from operations stood at US dollar 7.4 billion. This is a solid metric for the company. It has also listed its investment in the R&D space. Now, this is the forward guidance where the company has said that the revenues for the third quarter are likely to be in the range of US dollar 4.36 billion to US dollar 4.74 billion. So the mean expectation stands around the same revenue levels which we saw for the second quarter of 2023. There is a summary of its quarterly earnings, where you are seeing that its revenues are 13% lower. The operating profit has also suffered because it has spent more money to earn these lesser dollar, and as a result of that, the margin of the company has shrank, and that has also affected its EPS, which is 24% lower. These negative headwinds are likely to persist for a couple of quarters more, and we are not really likely to see any positive growth in the second half of this year as well. But its lower side, its revenues are likely to stabilize around the current levels unless any significant adverse impact takes place regarding its business operations. If things remain the way they are, the company is expecting the stabilization of revenues, and the growth is likely to be back in the 2024. There is a consolidated statement of income with revenues 13% lower, and the cost of revenue is incidentally higher. The profit margin for the company is quite good in terms of its gross profit, but after factoring in other expenses, we see that its operating profit margin is close to 40 percentage point, with this net income being quite solid. There is a balance sheet, which we will not go into the details because mainly we look at the revenues of the company, whether the revenues are going up or down, and what its future guidance is, what the business prospects are. And in the semiconductor space, the competition is tough, but so is the demand. And Texas Instruments being established player with so many decades under its belt, I am expecting the company to leverage its solid base and pose a bounce back in coming quarters. These are the segmental results with analog semiconductors bringing in major chunk of revenues, and the embedded processing segment has brought in less than $1 billion, with other part of the operation bringing in US dollar 359 millions. This is about the Texas Instruments. This is a semiconductor company which designs the chips, the semiconductors. And for more details, you can of course refer to its website as well, theti.com. Now, let us look at the technical side of the story and where things stands for the company's share price. It has seen significant decline post its earning release because Not only company posted lower revenues, but it has also given middling forward guidance. It is not really expecting a sharp turnaround and a reversal to the prior revenue levels, and that has continued to weigh on the stock price. But on these lower levels, the Texas Instruments share price seems to be stabilizing, and if it doesn't really decline much from the current levels on the lower side, then we can indeed think about going in for buy on dips approach later in the later in the month, or you can even wait it out and see. I think if we give it more time to consolidate, and if it still doesn't really drops much from the current levels and hangs in there, oscillates in between these low of 163 to 170, and if it doesn't really see any sharp move on the lower side, then I think we will have reasons to believe in its stability and the ability of the company to bounce back, and then we can indeed think about getting involved for the trade where we expect these levels to hold, and even if the company doesn't really go anywhere, we can still expect the share price to trade in a range, and with buy happening on the lower side of the range, we can still expect to profit from our assessment of the company's share price moves. So it becomes important for us to watch out for the company's price moves for next couple of weeks, because from the immediate term the things are kind of bearish. It is still inclined for the bearish moves, but maybe if we see these ongoing bounce back from the lower levels, able to climb past the immediate high at 170, then I think we will have more reasons to convince ourselves of the end of decline and the possibility of resumption of consolidation with bullish bias. So, keeping that in mind, we can indeed think about buying the stock, but not straight away. It is still bearish, and maybe once things stabilize and we have more markers which are pointing northward, we can indeed give it a try and take chances. Right now the time is yet to come, and of the Texas Instruments. So depending on your outlook, the stock is bearish from the short-term perspective, but the stock is still bullishly inclined from the longer-term perspective. So depending on what your time horizon is, you can take the bait in the company's share price. So that's all from my side for today's session of Daily Stock, where we consider the pricing formation and the business model along with the quarterly earnings of the Texas Instruments. There is one interesting stock in the semiconductor space, and we indeed have chances to find its price trajectory with favorable outcome. So thank you all for joining in. I will be back tomorrow with a equally interesting stock to work with. Do come back. See you next time around. Thank you all for joining in. Goodbye.